Welcome to this episode of Markets Week Ahead, where I give an update on what transpired last week and what could drive the markets in the week ahead. If you like this video, do subscribe. Indian equity markets ended the week on a positive note, but it was far from an easy ride. The Nifty gained a little over 0.5%. Those gains, however, came after a week in which markets had to balance two very different forces. On one side were rising geopolitical tensions in West Asia, which pushed crude oil prices higher and kept investors worried about inflation and corporate costs. On the other hand, we had the first quarter earnings where strong numbers from large IT and BFSI space, especially banks, gave investors enough confidence to continue buying. In the end, the earnings won the battle, allowing the benchmarks to finish the week comfortably higher. IT stocks once again led the market. The Nifty IT index climbed more than 4%, making it the strongest performing sector for the second straight week. TCS and Tech Mahindra were the standout performers after reporting encouraging quarterly results, and their gains lifted sentiment across the entire technology space. Financial stocks also contributed to the rebound. Private banks remained firm, while auto and oil and gas stocks ended the week with modest gains. The picture looked very different outside the large cap universe. Mid cap and small cap indices both finished lower, while sectors such as metals, realty, and FMCG struggled. At the same time, India VIX continued to rise, showing that investors still expect volatility despite the recovery in headline indices. Corporate results, like I said, were the biggest stock specific trigger throughout the week. TCS emerged as a top Nifty gainer, while Tech Mahindra also attracted strong buying interest. Several companies, including Federal Bank, Geo Financial Services, and BAIL, gained after reporting encouraging quarterly numbers. Not every earning announcement was well received. Companies such as ICICI Lombard, Tata Elxsi, and CEAT came under pressure after their results failed to meet expectations. This is becoming the dominant theme of the market. Investors are rewarding the companies that deliver on earnings and become equally quick to punish disappointments. The coming week could be more important than the one which has just gone by. So far, the rally has been driven mainly by a handful of heavyweight companies. The next few trading sessions could indicate whether buying begins spreading to the broader market or remains concentrated in large cap names with strong earnings visibility. The earnings season is also entering a much busier phase. With more companies reporting results, stock specific moves are likely to become sharper, making earnings far more influential than the daily headlines. Global developments will remain equally important. Crude oil has once again become a key market variable, and any fresh escalation in West Asia could quickly change sentiment. At the same time, investors will continue watching developments around the Strait of Hormuz. As long as shipping through the strait remains uninterrupted, markets may gradually adapt to the conflict, much like they did for the Russia Ukraine war. However, Iran's latest threat to disrupt shipping through the Red Sea route introduced a new risk. Any disruption there could have much wider implication for global trade and energy supplies than what we saw as far as Hormuz was concerned, making it one of the most important developments to watch in the coming days. From a technical perspective, Nifty's immediate support remains at about 24,200. On the upside, 24,400, 24,500 zone remains the key hurdle. A sustained move above the range could attract fresh buying, while a break below this support may bring another round of profit booking. So happy and safe investing going ahead. Thank you.